Did you know there's a Chinese bank listed on the Singapore Exchange that quietly pays a dividend yield of over 6% in Singapore dollars? It's not a REIT, not a local bank, and definitely not some high-risk penny stock. It's Bank of China, through something called an SDR. In this video, I'll explain what this SDR actually is, whether Bank of China is financially strong, how much dividend it has been paying over the years, and most importantly, is this a good dividend stock for Singapore income investors like you? I'll also share the risks and pitfalls you should know, so stick around till the end if you're serious about building a dividend portfolio that works. And hey, if you enjoy clear, easy-to-understand breakdowns like this, make sure you like this video, subscribe to Wealth for You, and turn on the bell so you won't miss the next dividend idea coming your way. Disclaimer: this video is for educational and informational purposes only. It does not constitute financial advice, nor does it recommend buying or selling any investment. Always do your own research or consult a licensed financial advisor before making any investment decisions. The views expressed are those of Wealth for You and are based on publicly available data at the time of recording. Part 1. What is an SDR? So let's start from the top. You might have seen this listed on SGX, BOC SDR with ticker symbol of HBND. SDR stands for Singapore Depository Receipt. It's like a wrapper that allows Singapore investors to invest in overseas companies. In this case, Bank of China, without needing a foreign brokerage. You buy it in Singapore dollars, it trades on SGX, and you even get dividends in SGD. So it's convenient, especially if you want China exposure but prefer investing within Singapore. Part 2. Bank of China Financial Strength. Now let's look at how Bank of China performed in 2024 and why it's considered a giant with strong fundamentals. Net profit, RMB 252.7 billion. That's about SGD 47 billion. Total assets, RMB 35 trillion. One of the largest banks in the world. Capital adequacy ratio, 18.76%, showing it's well capitalized and resilient. Non-performing loan ratio, only 1.25%. Very healthy, especially for such a massive bank. Provision coverage, 200.6%. Double the reserves needed for potential bad loans. Translation: this is a highly stable, well-run bank with plenty of cash and low default risk. Part 3. The dividend story. Now let's talk about the part we Singaporeans love most. Dividends. Here's where Bank of China quietly shines. For over a decade, BOC has been consistently paying dividends, and not just maintaining, but slowly increasing them over time. In 2024, they paid a total dividend of RMB 2.424 per 10 shares. That's roughly SGD 0.045 when converted. Now, here's where it gets interesting for us in Singapore. If you had bought the SDR listed on SGX, your dividend yield would have worked out to be over 6% in Singapore dollars. Think about that for a second. That's comparable to what local banks are paying right now. It's more stable than several REITs, which have faced payout cuts due to high interest rates. And it's paid semi-annually, so you get cash flow more regularly than waiting once a year. Now, for those who like to dig into numbers, BOC's dividend payout ratio in 2024 was around 32%. That's a healthy balance. They're not over-distributing profits just to please shareholders, but they're also not being stingy. In short, BOC keeps a strong buffer for growth and capital stability, while still sharing profits with investors. That's exactly the kind of behavior income investors like us want to see: consistency, sustainability, and real cash in hand. Part 4. Why Singapore investors might like BOC SDR. Here's why BOC's SDR could be appealing. Diversification. If most of your dividend stocks are in Singapore, like DBS, OCBC, or REITs, adding BOC gives you exposure to China's massive banking sector, which moves differently from the Singapore market. It helps spread your risk geographically and across industries. High yield, one of the better-paying income stocks on the SGX, especially compared to many REITs under pressure from high interest rates. Government-backed stability. It's a state-owned enterprise. That comes with stability and policy support, especially during economic downturns. Strong balance sheet with over RMB 35 trillion in assets and consistent profitability, it's one of the most financially solid banks globally. SGD payouts, local access. You buy it on SGX in Singapore dollars, and the dividends are credited directly to your bank account, easy and fuss-free. Part 5. But watch out for these pitfalls. Now, not all that glitters is gold. There are some things you need to consider. Currency risk. The underlying company earns in RMB, and though the SDR pays in SGD, you're still exposed to exchange rate fluctuations. China policy risk. Chinese banks are sometimes used to support national policies, which might not always align with shareholder returns. Slow growth. BOC is massive and mature. Don't expect tech stock-like gains. Interest margin pressure. Net interest margin fell from 1.59% to 1.40% in 2024. Lower rates may squeeze profits. So yes, it's stable, but it's not fast-moving or without risk. Part 6. Should you buy it? If you're a Singapore investor who wants reliable, high dividend income in SGD, exposure to China's massive banking system, and low volatility in your dividend portfolio, then Bank of China SDR on SGX is worth considering. But if you're looking for high growth or are wary of China exposure, this might not be for you. Conclusion. So, is Bank of China's SDR a hidden dividend gem quietly sitting on the SGX? Would you consider adding it to your income portfolio? Let me know in the comments. I'd love to hear your thoughts. Would you buy BOC for the yield, or is China exposure still a concern for you? And hey, if you found this video helpful, do me a quick favor. Smash that like button and subscribe to Wealth for You. It helps more Singapore investors discover steady, reliable income ideas, just like this one. This is Wealth for You, helping you build income, not just assets. See you in the next video.